entry techniques. I'm gonna combine this with the common mistakes you can make trying to trade this method, right? The entry technique. So when let's visualize this again. Upon accumulation, manipulation, OTE, close. So when this is been taken, you expect price to go into a key level, right? You have to be bold to sell the big bold green candles and hope for them to go bearish, right? And you have to be able to buy the big bold red candles and watch price engulf it and turn it to bullish, right? So now the idea is having this in a key level, right? Nice. Let's go into the examples we are actually using. Where was that? Sorry. Okay, let's use this two right here. So now we have a daily fair value gap right here. We must not forget that. Yeah, so this is a daily fair value gap, right? And this is the high we are attacking, right? So let's go down to the 1 hour. Now it's your ability to identify the higher time frame, draw on liquidity. You identify the draw on liquidity first, and then you identify the possible entries, the possible place you can enter, and then you identify the risk in advance, right? That's the possible place. Price shouldn't get to. That's an invalidation point. This is your trade job. You're finding the draw on liquidity first, which can be the range high or the range low. You're finding a place price doesn't have to go to for that idea to stay intact, and then you're looking for a possible entry, right? So we took out this liquidity, right? And we dipped into that fair value gap, right? So if you were actually a high time frame trader, you would have used the low of the candle forming that fair value gap, right? But most of you don't want to use the high stop loss, right? So you can also stick to the number 2022 mentorship, break of market structure, retests. This is another block, and boom. So with that, you you can be risking with this other block right here, your stop loss below that low, right? Why should we go below that low? Why should price not go? It has taken liquidity. It has nothing to do with that low, not anymore. So if we are right, you're expecting price not to go below this low, right? So you can actually have that, and your take profits are that high. That's how you get all those large RR, and yeah, here we go. This 1:8 RR, right? So you can either use the lower time frame entry, which is the break of market structure, the usual break of market structure, and then you target the higher time frame drawn liquidity for a bigger RR. You could also enter with this with respect to yesterday price action. This range high was taken, this range low was taken. So here you could enter with this right here, with your stop loss below here, the low of this fair value gap, right? Below the low of this fair value gap. So this could have been your entry, and you target first the range high, and then the higher time frame draw on liquidity, right? So you could see you could actually make a nice RR with this. So it's more about the key level or the PDRA at which price is reacting. You're using that, right? So if you are using another block, your stop loss is above the body of that other block or the high of that other block when you're selling, or the stop loss is below it when you buy, right? And if you're using a breakout, the same thing, right? So your entry has to do with your time frame, the time frame you're entering, right? So this, you could have used this low, that's the fair value gap low, or let's narrow down, let's go up. You could have used this also, the 4 hour, this fair value gap right here, and then you can target the high time frame drawn liquidity, or you could actually go down to your 15 minutes, and if you notice there was also a fair value gap right here, right? So you could have entered there, and let me say you entered there, your stop loss can be right below this guy right here, this swing low right here, if you are using 15 minutes, and then you target the high, right? So if you are using the 5 minutes also, you could easily do the same. Look for PDRE here, right here. Let me say you entered late in the 1 minute, folks. The 1 minute, folks. Yeah. So fair value gap, you entered here. You can actually put your stop loss right below this low and expect price not to take it out, because this low has taken out a higher time frame liquidity, right? I expect it to go, and this can be a way for you to gain a big RR, and you use the same entry, the same risk to target the higher time frame drawn liquidity. But then just a reminder, you need to catch only one of the three: total sweep, or OTE, or the close, right? So you could actually close your trade here for a 1:8 RR, or you could just target the higher time frame drawn liquidity if you have the patience. But always pay yourself, always pay the trader when the market makes itself available to you, right? So uh that's one way to, that's another way to enter it, right? Another way, the normal breaker method, right? So let me see, we do have a breaker right here. Yo, we couldn't really notice how fast this moves here, that it couldn't give a retest or market structure break. Yeah, that's mostly the way it looks. The market spends much time accumulating, and then when it's time to distribute, it just speed and off. You understand? So that's the way you enter. And another one more way to enter is when price takes out the low or the high like this, you go into your lower time frame. You go into your lower time frame. This is your 1 minute. Once price takes out this and comes back into the range, I can as well take this with my stop loss at just that high, and expect price not to take it out. Why? It has swept out liquidity. Once price sweeps liquidity, it automatically makes that high or that low a high resistance liquidity run. So if we are right, the market shouldn't take away this high, right? And just a reminder, you're gonna feel it more times than you actually think you're gonna get it because you're trying to rush into this. Take your time and practice it, folks. It's the real this is the way the market books, right? The highs and lows. There's always something there. It's there for a purpose, the highs and lows, right? So that's your entry technique. And the psychological side of this is this. The common mistakes you're gonna make is randomly trading highs and lows, right? You're picking almost every high and low, and you're expecting, big moves every time, right? Which is why I say you should always play the trader. Then next is not managing your risk. You have to manage your risk. I'm gonna lay emphasis on this as time goes on in the group chats. But then the common mistake is trading every high and lows. It's not that way. It has to be a high or a low close to a key level, above or below a key level that's not been tested or vested inside of it, right? So that's the way you make your entries, and the timing as usual. And a reminder, you can look at every candle from the lens of open, high, low, close, from the lens of accumulation, manipulation, and distribution. What do I mean? You can also use your 4-hour charts as um, accumulation, manipulation, distribution stuff, right? So this is your 4-hour. Just I want to do a quick review on this one because I feel like a lot of you need it, right? So we opened here on the 4-hour and we manipulated to the downside and we distributed to the upside. So you can take the high time frame candle at the lens of accumulation, manipulation, and distribution. It's just left for you to find the time frame that works best for you and apply it with caution, right? And you have to practice very, very much on this to get it right. You understand? So this is it, folks. We're gonna have a live section where I analyze with you guys, and if you have any question with respect to the video, just drop your questions on the group chat, and I will attend to all of them. Right? So, with that being said, use your weekend to practice this and back test it. Candles are ranges, the highs and lows of the ranges. Liquidity rest above there, and if above them a key level is there, we watch how price reacts inside the key level and gets back into that range to attack the opposing side of the range. And with that, I'm gonna tell you guys good luck and good practice. Be safe.